Hey everyone, I wanted to bring in someone special to answer a few questions for us today. Some questions that could potentially affect you and really help you as well in your life. And today I have Stuart Bayliss. Now, Stewie and I have known each other for maybe about 17 years now. So we've known each other for quite a while. We've worked together in different life forms, predominantly in the finance space. And he is a qualified finance broker with how many years now
18.
have you been in the
Yeah,
industry,
18 years,
Stewie?
Isa.
18 years. Well, there you go. So he's been in the industry for 18 years. So he knows his stuff. And he's definitely someone that I go to when we're trying to work out some creative strategies for different clients and trying to get them closer to their goals. Now, I will warn you, because I've known him for so long and because we know each other well, I do call him Stew Dog or Doggy. So if that comes out by accident, I apologize. I am not demeaning him. He and I are all good. Okay. Don't call the cops. Don't call the social media cops on me. So welcome, Stewie.
Hey, Isa, thanks for having me on.
Yeah, thanks for coming. So today I wanted to ask you a really, I guess, a topical question at the moment, and that is what the hell is going on with APRA these days? And you're going to have to probably reiterate who APRA are as well, just for those that may not be quite, au fait with it.
Yeah, it's the hot topic at the moment. The APRA is the Australian Prudential Regulatory Authority. They have dominion over a lot of what happens. So uh, two organisations in Australia, two government departments that actually handle regulation over mortgages in Australia, and that's the ASIC, the Australian Securities and Investment Commission, and APRA is the Australian Prudential Regulatory Authority. And APRA has decided that they're going to raise the floor rate. So I'll say what it is first. The floor rate going from 2.5% to 3.0%. So what's a floor rate? A floor rate is where the lender has to test so say your interest rate was 2% and they then have to add 2.5% to that. So therefore, they would be testing your mortgage at 4.5% to make sure that you could actually afford it at a higher interest.
Yeah. So in case it gives you buffers, it gives you buffers in case rates rise, which they do in time.
Yeah, exactly. And it's always good to make sure it's a bit of a stress test to the mortgage. So now they've raised it from 2.5% to 3.0%. So where again, if you had the interest rate of 2.0%, they would have tested you at plus 2.45%, equaling 4.5. Now they'll test you at 5%. So it's 2% plus 3% equals 5%.
Okay.
So
That's a
therefore,
lot of percent.
that's a
So
lot of percent.
in layman's terms, what does that mean
Yeah.
for the average person?
So for the average person, where they may have been able to, borrow on their standard incomes plus their rents and all that sort of thing, they may have been able to borrow X amount, which might be $500,000. It will now just bring that down slightly. So and it's not going to be huge effect. And it might be something like 480,000 or something. They're just examples, but it will bring down their max borrow just slightly.
Yeah, and of course, everyone's individual circumstances will differ. But overall, it does bring your borrowing capacity down a little bit. So, I mean, it's not a huge effect, but they're obviously doing this to kind of calm the market down a little bit. And at the moment, we're predominantly seeing owner occupiers in the market as well, although it will affect everyone, including investors. So, what advice would you have for people looking to either buy their own home or an investor at the moment, knowing this has just occurred?
I always would say go get a pre-approval and talk to your broker. Happy to stick my hand up for that. So always talk to your broker and get your numbers before you actually move on anything, and then find out where you're actually sitting right now. This is a bit of a handbrake from the government to just try to pull the handbrake on. Normally, they would use interest rates like the Reserve Bank would raise rates slightly, and therefore they would be passed on via the lenders to the customers. But they've decided to pull the handbrake on the floor rate instead. So therefore, it's
Yep.
just lowering the borrowing amount, but people can still use the lower interest rates. So
Yep.
yeah, so sit down with your preferred lender, your mortgage broker, and just get your numbers, get all that stuff into your head, and get a pre-approval in place, and then move through to purchasing from there. But that way, you know what you're going to buy, and you know what you're after, and you know your maximum borrows.
Yeah, and more and importantly, not just about what you're going to buy, but for those of you that are out there looking at your current finances and looking to improve your finances, some of this may include refinancing some of the mortgages that you've got. So it's important that you look at an overall structure as well, as an overall strategy rather of your finances and how they're laid out amongst different lenders and how that overall affects you. Because having different combination of lenders can give you completely different amounts. Wouldn't you agree, Doggy? Yeah.
Yeah, very well said. Uh, um, it's it's really worth looking at. These should be in constant review as well. So we're saying that don't have loyalty with one bank necessarily. One bank can get you to a certain place, and then you could look at others afterwards. But there are more lenders that will. I think we'll go into this more into another topic later on, Isa. But there are combinations of lenders that can get you this property and then that property like shortly thereafterwards. Whereas if you keep it all with this lender, you might be limited to just one and a smaller property or just that one property. And obviously, certainly the way ESA works and the way that my finance career has gone, the more properties that you can get, the better the retirement, the better the position you can be in, and then holding those over a long period.
Yep. Yep. Okay, great. Thanks for that. And guys, we will be back to you with some more questions that you can use to help improve your financial status and also get you closer to your goals.